On September 1, 2023, federal marshals froze $310 million tied to My Forex Funds, halting the world's largest trading academy overnight. How did the internet's loudest gurus secretly transition from selling $1,000 courses to owning offshore platforms where they controlled the software? $15,000 bought a turnkey trading floor in Cyprus. A hidden B-book engine absorbed every single retail trade. Automated delay software injected fake slippage. The instant profitable traders clicked sell. For a decade, the business model of online financial education was simple. Build an audience on social media, flash a rented supercar, and sell a $997 PDF course on technical analysis. By 2022, customer acquisition costs on Meta and Google exploded past $400 per conversion. Meanwhile, refund rates on generic course material breached 30%. Can an online business survive when traffic costs rise faster than course prices? The entire infoproduct industry hit a ceiling. Then came the regulatory sledgehammer. In October 2023, the United Kingdom's Financial Conduct Authority banned unauthorized influencers from promoting financial products without strict, licensed disclosures. Regulators across Europe and North America began issuing cease and desist letters to YouTubers selling unlicensed signal channels and educational masterclasses. Selling raw financial advice was suddenly a legal minefield. But the smartest operators noticed a massive loophole written into offshore financial software regulations. Why sell a static $997 course to a skeptical buyer when you can give the education away for free and charge them to trade on your own proprietary platform? To execute this shift, course creators didn't need to build software from scratch. They simply flew to Limassol, Cyprus. Limassol is the white label capital of the financial world. Software vendors there offer turnkey brokerage packages on platform infrastructure like MetaTrader 5. For an upfront fee of just $15,000 and a $5,000 monthly maintenance charge, anyone can brand a full-scale trading environment. You get branded mobile apps, a CRM, and integrated payment gateways. You don't need a banking license in New York or London. You simply set up an international business company in St. Vincent or Nevis. What happens when you eliminate the friction of selling expensive courses and replace it with a sleek, free trading environment? If you want to understand how deep this transition goes, VARJIX breaks down these digital business models every single week. Subscribe to stay ahead of the curve. The guru's marketing funnel transformed instantly. The headline changed from buy my $997 course to take our $100,000 funded trading evaluation challenge for just $500. The student feels like they are getting a bargain. Instead of paying for mere words, they are paying for access to simulated capital. But giving away the secrets to wealth for free wasn't an act of charity. It was the bait for a trap that regulators hadn't even named yet. Chapter 1. The B-Book Matrix. To see how these platforms extract millions, you have to look under the hood of brokerage execution models. In a traditional, legal financial platform known as an A-Book brokerage, your order is passed directly to real interbank liquidity providers like JP Morgan or Citibank. In an A-Book model, the platform makes money strictly from a tiny commission or spread markup per trade. They want you to succeed, because if you trade forever, they collect commissions forever. What happens when a platform operator decides they don't want to settle for a $3 commission on a winning trade? They activate the B-Book engine. In a B-Book setup, trades never reach the real market. The platform never routes your buy or sell order to any bank. Instead, the platform operator becomes your direct counterparty. If you buy your /USD and lose $10,000, that $10,000 doesn't go to London bankers. It goes directly into the platform owner's pocket. Why is this model so absurdly lucrative for trading educators? Because academic literature and broker statistics reveal an undisputed mathematical fact. 80 to 95% of retail traders lose their entire account balance within 90 days. Think about this incentive structure. When the guru was selling a course, they needed you to feel happy so you wouldn't request a refund. When the guru owns the B-book platform, your financial liquidation is literally their quarterly revenue target. Enter Murtuza Kazmi. Operating under the corporate parent Traders Global Group, Kazmi launched My Forex Funds out of Toronto and New Jersey in July 2020. Kazmi marketed My Forex Funds not as a broker, but as a simulated prop firm. He claimed to offer aspiring traders access to millions of dollars in firm capital if they could pass a two-stage evaluation challenge. Between July 2020 and September 2023, over 135,000 retail traders paid registration fees exceeding $310 million to attempt these trading challenges. On social media, Kazmi was celebrated as a visionary savior who gave ordinary people freedom from 9-to-5 jobs. Remember that missing $310 million. CFTC investigators were about to audit the underlying software server logs. What federal forensic accountants discovered inside Traders Global's custom MetaTrader scripts triggered one of the largest asset freezes in retail trading history. The platforms were operating a pure B-book model. Trades never reached real markets. The educators were acting as the house, directly profiting only when their own students lost money. If 80% of users fail naturally, what happens when 5 or 10% of students turn out to be brilliant traders who actually make money? In a pure B-book model, if a student makes $100,000, that money must be paid out of the platform owner's corporate bank account. This was Murtuza Kazmi's fatal flaw. The insatiable greed to capture 100% of a trader's lost capital rather than settling for a flat, legal software fee. Instead of routing those skilled traders to real A-book liquidity markets, Kazmi reached his point of no return. He authorized the deployment of specialized server plugin software designed to intentionally sabotage winning students. The CFTC court filing detailed how Traders Global installed plugins like Dealer and Slippage into their server architecture. When a winning trader clicked a market order to take profit, the software intentionally delayed execution by several seconds, forcing the order through at a substantially worse price. One victim cited in federal filings felt this exact trap firsthand.
He was an ordinary retail trader who spent months studying technical charts.
What happens when the person teaching you to trade makes their millions only if you fail? Internal chats seized by federal agents showed employees casually discussing how to trick successful users into breaking trading drawdown rules. You wake up. The trading app won't execute your stop loss. Your account equity drops below the threshold, and your funded account is terminated automatically. While retail accounts were breached by rigged software, where was the customer money going? Bank records filed by federal prosecutors revealed that Kazmi transferred over $100 million into personal accounts, buying luxury real estate in Canada and Dubai. The educators had successfully built their own digital casinos, but they forgot one crucial detail. The house only wins until the feds decide to audit the slot machines. Chapter 2, The Reckoning and the Compliant Playbook. On September 1, 2023, the CFTC obtained an emergency restraining order in New Jersey federal court. Simultaneously, the Ontario Securities Commission issued a freeze order against Traders Global Group. Over $310 million in bank accounts was locked instantly. Users visiting the My Forex Funds website were greeted not by trading charts, but by a stark federal enforcement notice. The September 2023 CFTC takedown proved that while B-booking brings federal indictments, operating a legitimate platform business is still the ultimate modern income engine. How do legitimate online entrepreneurs build software platforms that generate massive recurring profits without landing in a federal penitentiary? The secret lies in clean A-book technology architecture, regulatory arbitrage, and transparent fee models. Instead of acting as the casino counterparty, smart founders act as pure technology providers. They connect retail users directly to licensed Tier 1 liquidity providers. When a user makes a winning trade, the external market pays the profit, not your corporate account. You bear zero counterparty risk. How do you turn this into a multi-million-dollar cash flow business? Through 3 legal monetization layers. Layer 1, platform subscription fees. You charge users $49 a month just to access custom charting tools and backlisting software. If you have 10,000 active students, that is $490,000 in high-margin monthly recurring revenue, completely independent of trading outcomes. Layer 2, raw volume markup. You add a clean 0.2 pip markup on trading spreads, sharing the volume commission legally with regulated liquidity bridges. Layer 3, institutional technology licensing. You license your customized trading platform to other educational communities for a software setup fee. This is how modern fintech builders scale, without getting hunted down by federal enforcement agencies. If you want to build a real internet business, VARJIX breaks down these software architectures and execution models every single week. Hit subscribe to join our operator community. Notice the fundamental difference between the legal platform model and the guru B-book trap. The B-book guru relies on deception, rigged software, and regulatory evasion. Their business model ends with frozen assets and federal indictments. The compliant platform founder builds software infrastructure. They create genuine utility, charge transparent fees, and construct an enterprise asset that can be sold for an 8-figure exit. Here is your assignment for this week. Examine every financial influencer or trading community you follow. Look at their platform terms of service. Find out whether your trades are routed to an external market or absorbed by an offshore B-book internal clearing account. Once you learn to trace the software mechanics and financial routing, you will never look at online financial education the same way again. The migration from selling courses to owning platforms wasn't caused by a sudden desire to empower students. It was driven by cold, ruthless business economics. Why settle for a one-time course payment when you can control the platform software? And while bad actors like Murtuza Kazmi manipulated execution scripts and paid the ultimate price in federal court, legitimate platform builders are quietly constructing the modern internet's most lucrative software businesses. In the modern digital gold rush, the ultimate flex isn't selling the shovel, it's owning the ground they dig in, and legally charging them by the hour to find nothing. On September 1, 2023, $310 million was frozen because one platform owner tried to control both the shovel and the ground beneath it. He copied a playbook written 20 years earlier by a broker who thought regulators would never look inside the code. Subscribe to VARJIX right now to break open the next room in this digital machine.